Good morning, boys and girls. You get an audio check. Audio check, check, check. I think we're ready. I think we are good. Give it a second for the stream to catch up. But happy Monday. Who deported Santa? Hilarious. Hilarious. You know, does the market have a case of the Mondays? I don't really know. I don't really know. Look at this. Oh, you guys are funny. Audio works. Audio check. Check, check, check. Sounds good. Hola. Good morning. Amit is salty. Amit is so salty because he did not buy silver when his uncle told him to do so. Now he wants it to crash so hard. Hilarious. Hilarious. We're going to get into that today, actually. I mean, I bought a bunch of silver and gold. And I remember silver was like, I remember making the deal. I did a deal on silver. And I think it was trading at like 15-ish. And I ended up getting it for 12 because the guy, who's a friend, which is why I had to do it the way I did it. Because I was like, I'm going to get a deal here. He bought it at like, I don't know, $40, the last all-time high. And yeah, I feel like I should text him. But then again, I'm like, I don't really want to text you, dude. I don't want to text him because like, hey, by the way, you're up. Probably has no idea. And on whatever you had remaining. But at the same time, yeah, I mean, I'm up a boatload on my silver and I'm still thinking, I actually still think it has room. So we're going to get into that today. Today's kind of like crash, if you will, is, I mean, it's pretty specific. And what I'm going to do real quick, let me go ahead and share my screen. Welcome, by the way. If you guys are new, before I open this up, make sure you give the channel or give the video a like and subscribe to the channel. We're doing this every Monday on as long as the market is opened. But every Monday, what we do here is go through kind of like what's the main catalyst for the week? What do we have to look forward to? And what's going on right now? And the big thing is silver flash crash, right? But it's a mechanical flash crash. And I'm going to get into that today. If you guys don't know what's going on. So last week, actually, what we did, we actually talked about something called financial repression, which is a really crappy name. And this is the financial repression version 2, if you will. But let me just, should I move further to, I think this is fine. Am I sitting in the middle? I have no idea. But yeah, we're going to talk about that. And essentially it's like, why is silver and the entire, what's it called? Periodic table, like running the way that it's running. And what do we have to see to think that it's actually over? Today is not that. I'll give you that. But before we get into that, this is what we do. So this is the basic this is the main recap of what happened from an economic perspective last week. So the big headline of the week last week was GDP. And yeah, this was a massive surprise. So the consensus number was 3.3 GDP for Q3. And what came in was like, holy crap, 4.3. Huge, huge shocker. Or to me, I mean, I guess maybe the market, but definitely a big shocker to me. Consumer spending is up 3.5%. Exports are up 8, like almost 9%. And government spending is up a significant amount. Those are the things that really drove the quote unquote growth on the GDP number. But this GDP number, we talk about what cycle we're in when it comes to the market is massive. It's like it's one of the main drivers, if you will. So it's the relationship between inflation and growth. GDP is growth and inflation is like what we see in CPI. And the rest of the numbers, core PC, which is like what we're spending, which is a direct relation to inflation, slightly up, not nearly as big as that GDP like number. Good God. I don't know if the GDP number is real. I think that's part of what might be maybe stunting, if you will, this Santa Claus rally. But we're going to get into this right now. But yeah, consumer spending up a little bit. So 2.9% year over year from 2.6. Durable goods kind of mixed. Inventories did rise though. So manufacturers expecting that consumers, us, will continue to buy in the very near future. And then jobless claims, which we get every week, initial came in at 214,000. Continuing claims up about 38,000 week over week. So that does kind of signal a bit of a slowdown. So maybe GDP won't stay so high. But I will say that GDP number and whatever numbers we're getting right now, I mean, we're just coming off a massive slew of revisions. So I would take it with a grain of salt, especially since the government shutdown is just now, government's just now opening. And think, we'll see if it holds. We'll see if it holds. All minerals will pump with AI data center and chip growth. Yeah, so that's for specifically silver and copper. And I haven't looked at Freeport FCX, ticker FCX, this morning yet, but I think it's probably worth a look-see. I know it was in a bit of a breakout formation a few weeks back, but I'm pretty sure that's well underway. And consumer confidence, I mean, slightly down, but not really a big enough deal to move a market. Other headlines, look, right now, this is the deal. The deal is here. CME margin hike. Does anybody know what this means? When I say like the CME initiated a margin hike, is that something that you guys are familiar with? Does anybody trade futures? If you trade futures, you'll know, like, what's the regular margin requirement on a futures contract on a big, we call it the ES futures. I think it's like $14,000 or $15,000 a margin. But when certain assets get highly volatile, okay, here's a good one, like GME back in the day. Well, the CME regulator might come in and increase margin requirements to trade specific highly volatile asset. This is a very normal thing. It's exactly what caused the GameStop crash back in the day when the CME, it basically hiked the margin requirements for GameStop, and Robinhood didn't have enough margin cash, if you will, in the bank to continue to trade it. And that's why the buy button went away. But it was because of the CME. And here they go again. So this is actually, it's not a bit, it makes sense why we're pulling back a little bit now. Silver's different than GameStop. I'm pretty sure that, and I don't know what the margin hike was. I'm pretty sure though that people will pony up and continue to trade this. But what this means in the very near term is that there's a bit of a margin unwind, if you will. So it's down here. It's de-risking. So leverage unwind, if you will. And so if you were too highly levered to silver because it's going parabolic and you are using all your margin, well, you have to sell now because of the CME regulations. So this is a margin hike requirement. It's a regulator thing, has nothing to do with the market itself, but there's a little leverage unwind that's going to happen, which is exactly what we're seeing right now. And when that unwind is done, then we'll see if it still has legs. Oddly enough, happens at a pretty critical psychological level. That's $70, I think it was about $80 benchmark, which is it's kind of like that wall that when a stock passes, or an asset, if you will, passes through $75, I mean, it usually makes this crazy straight shot to 120. I mean, go back in history, it happened time and time again. But yeah, I think it's weird how these things always line up, but this is a big deal, and it's very explicitly margin pressures but it's a temporary deal. So I think it's important to watch, right? Currently, sure, we can have a little pullback. This initial blow, 10% down on, I think it was on palladium, nearly 11% on silver. It should be it. So when a margin requirement hits like this, or a margin call, basically people are getting margin called right now. Hilarious. But it's a pretty instantaneous adjustment. So this should be it. And then we'll see moving forward if they're still interested in it, or if there's still money to go around that's buying this asset. Have I bought anything recently? Yeah, I have. I'm right now, I'm really kind of digging into what my top picks for 2026 will be. So I'm sure you guys might be interested on that later on. I'll just tell you right now, the two for sure. Number one for sure. Do you guys have a Chris is in the house? What's up, dude? Number one top pick for sure, and it might be controversial. I don't know. It's going to be Rivian. We'll get into that. I think Chris and I will be. Oh yeah, there it is. I think Chris and I will be on, like, they do like an annual thing, so I'll probably jump into that. But if not, I'll do it on my channel for sure. But I think it's an inflection year, transition year, if you will, for Rivian, that people might not really realize the impact that it could potentially have. Just think Model 3 Tesla plus a little FSD. That's coming this year for Rivian. So it's an R2 shipping, and it's something called Autonomy Plus, which is the subscription service for Rivian. So it's a big deal. It's a massive deal. It's a risky trade, but if it works out, I think it's significantly higher ROI potential. But anyways, I think the gold and silver stuff, look, we just covered that. It's hitting the headlines now. This is why it's simply a margin call. Does it initiate waterfall selling? Not, I don't think so. Not with what's going on. So I might be looking at this silver thing like a potential buying opportunity, as much as some people might think that's crazy. But again, tech mega caps lead the U.S. stocks a little bit lower. Listen, we're gonna watch this commodity trade, this debasement trade. I'll talk about what I think it really is. I don't think it's so much debasement as something called financial repression, which again, bad word, but it makes sense as to why it is when you understand it. And then oil. So oil rising. I think Ukraine was like under attack this weekend. So still geopolitical risks. They're still out there. We're in peace talks. We're not at peace yet. Bitcoin's kind of stabilizing. Probably nothing major happening. But all in all, this kind of leverage unwind is leading to a bit of a pause as we near the very end of the Santa Claus rally. And we're kind of digesting like really heavy gains. It's been an amazing year for a lot of people, but this is it, right? De-risking today. Monday, I don't trade. You guys may or may not know that. I really don't do a lot of trades on Monday, typically because I feel like it's just it's like a knee-jerk reaction to a multi-day pause on the market. And a lot of times the market will either bottom or top on Monday. Today, it might be looking closer to a bottom for the week. It's a short week though, and we'll get into that right now. Actually, before I do that, financial repression, just so you know, these are the slides from last week, but it's like a little tiny like hidden strategy where government actually keeps interest rates slightly lower than inflation to slowly erode the purchasing power of our money, which is why it's financial repression. But the 2.0 is via something called silent deleveraging, which is stealth QE, which is exactly what we're doing. And this comes in the form of real rates, right? That's how we see it. If real rates are negative, well, the debasement trade is on. And right now, I think it is. There's another piece here. Here's like the mechanics of it. You can screenshot if you want, whatever. But the piece if this is what's going on, I kind of want to know, hey, look, what can stop this move? What can really stop this move? Because what it's not, what won't stop this move is a temporary margin increase by the CME for silver and gold and other commodities. That's not going to stop this move, right? So when I look at it today, I'm like, okay, that could be actually creating a buying opportunity, because the only thing that would stop this move is what I would call like some kind of productivity mode, like miracle. And that does come in the form of AI productivity. That's exactly what will stop this move. So if AI profit at like the low level, not the scalers, but at the application layer, if you will, like someone like a CRM or someone actually spending money on not hardware, but developing. It's like if OpenAI actually works, right? And it actually produces real GDP growth, then there's no reason for people to own cash, bonds, gold, silver, whatever. Not cash, but like bonds, silver, gold, etc. That's when it doesn't work out. And that is like a clear exit plan for the trade. So until that happens, I mean, there's still that question of, is AI in a bubble? And as long as that is this an AI bubble question exists, quite frankly, this debasement trade, I think, can continue, right? But yeah, you guys can look at that. Look it up. It's financial repression 2.0. I don't actually think it's the debasement trade. I do think it's that. And it's again, it's like it's a way for the government to like delever their balance sheet, right? By making our purchase power go down, but eroding their debt, if you will, without going into some kind of mechanical default. But it's a rigged game, is what it is. This is the rigging of the game, and this is how it works, right? But again, what are the mechanisms that we actually need to see? This is the AI boom, and if real revenue growth, if real growth shows up from this AI spend, cool, it was all worth it, and I didn't need to have gold and silver and all of that. Maybe not even Bitcoin to that extent, but I think we're too far away to see that, right? Like that's going to happen for a while. So yeah, I'm not really expecting that. In the meantime, we could easily see this kind of drop, which is essentially a volatility reset, and not a change in the actual trend, which is what I think we're seeing right now. So one thing I want to do is I pulled up the FOMC Fedwatch tool and saw, okay, so with everything going on, specifically this big GDP print, I'm like, okay, what's going on with the market forecast for rates moving forward? This is a screenshot of what the market was pricing in. I think it was about 2 weeks ago on the left-hand side of my screen. So this is for the January 2026 meeting at the end of the month. At the time, we had a 75.6% probability of being at 33.5 basis points. This is going up. So for the January meeting, probability, I think is, I don't know if is that a cut or a pause? I don't even know. I don't even know where we are. I think it's a pause, but like 84% pause. And then for April, that's when the first cut is priced in. That's static. The thing that jumped out to me is the end of 2027. And I don't know where this came from, but if the market is pricing in 2 rate cuts in 2026, which we know to be true, they upped the second rate cut, which was not expected to be until September. They upped it from September to July. But then they think big pause and then rate hike at the end of the year. So I'm like, okay, well, that's a little wild. So this rate hike expectation is exactly what would cause a bit of a midterm election pullback, midterm year pullback, and around this time frame. I don't know where they're getting this. I think it's going to have a lot to do with who the new Fed president is, but yeah, I mean it's wild. Oh, Sorry, thanks. So yeah, so it's a pause for the next 2 months. Santa Claus got deported. I don't know. But anyways, that's where we are, and I think that brings us all the way back to we need to kind of focus on what the broader macro is. So with that said, what the calendar looks like this week, if you don't know, it's a shortened week. Today we got home sales, pending home sales, which I believe are good. This could be a turnaround move in the market. Tomorrow we get those FOMC minutes. And while the minutes themselves don't always move the market immediately, I think it's more of a digestion point. This is, if you're not familiar with what the FOMC minutes are, it's like the back end internal meeting notes that they took in all of their meetings leading up to the rate decision. So it's what all the different Fed presidents were thinking behind doors. The stenographer back there taking all the notes and everything. So these things come out, especially in a time like this. It can move markets, maybe not immediately, but you might see some kind of tones shift and probably a lot of knee-jerk reactions too. But then we get actual housing prices on Tuesday. Wednesday, we technically get jobless claims, but I will tell you this. On Wednesday, it's probably a date of, I don't know. Wednesday's New Year's Eve. It's like Christmas Eve. I think we're open for a full day. I don't know. I have to check. But typically, Christmas Eve is like, don't waste your time kind of session. Not so this year. I mean, this was probably one of the best Christmas Eve trading sessions I'd seen in, I don't know, 4 or 5 years, something like that. But it was a good one. It was definitely a good one for sure. And then Thursday is New Year's Day, and the market is officially closed. And then Friday, we really don't get anything other than just a rig count, which is a nothing burger, which leads us to where we are here. So for now, until we saw that late 2027 rate hike just get priced in, that would be over here. We're entering 2026. And the closer that we get to 2027, which would be year 3, this makes sense. This is tracking now. So like this is 27, right? This is 26. This is essentially 2 rate cuts, 2 more priced in. And then people start thinking, well, now we're going to get into a rate hiking session after a bit of a pause. And the fear of that could actually create that midterm election year slight pullback. Now, I wouldn't worry about that slight pullback because in the meantime, there's something else to really think of, that we're here and seasonality has been a bit off. I would say it's not guaranteed that a pullback would be lower than where we are today, because again, we don't know. The move between now and July, June, July might be substantial, and it might be something similar to silver where we go up to 8,000 or 800 on SPY and then hit that ceiling and pull back, which quite frankly, I would expect something like that. But that pullback is to what, 65, if that, which is exactly what I would be thinking on silver. Maybe like, I think that's where I'll have to pull it up, but where we might have actually been. Hood's getting a little downside move right now. I'm just looking at the screens on the side. But anyways, that's where we are. So this is this. And you know what? Before I get into anything else, what I think we should do is check in with our good friend. Actually, do I need my screen? For sure, next week's sell-off. I mean, April 20. That's a regular folk. I'm not paying taxes till like October. I don't know. Most people do extensions, but sorry, I'm all regular folk. Hilarious. But yeah, there's a lot of stuff to get through. So let's do this. Before we get into the charts, let's check in with our good friend, Miss Cleo, and see what she has to say for the week, because I got no idea. It's a slow week. Let's see. Okay. So if you're not familiar with this part of the show, this is completely for fun, entertainment purposes only. Some people like it, some people don't. But this is Miss Cleo. She gives us a tarot reading every week. This is the T in TA, because if you want to call TA male astrology, have at it. But this is real astrology, so we'll give it to them. If this is what technicals look like, this is what that would be astrology. Is it astrology? Is it? I don't know if it's astrology or not. I mean, I don't know. Another Hierophant. Oh, yeah. I mean, I don't even know what days these are. But the way this works is we get a theme card for the week. That's the Ace of Pentacles. I don't know that I've seen that before, but it looks cool. It looks like it looks like we're walking through. Honestly, I'm looking at this and she probably just like hand picked this out of the cards. Like that looks like a new beginning kind of card to me. Anyways, we'll see. I don't see anything really worrisome there on the theme card. That's probably today. 3 of Wands. That's it's a low number. I think 1, she says impulsive. I don't remember what this Hierophant does. So I should probably Hierophant. Am I saying it right? I should probably remember soon enough. And then I do kind of remember the Knight of Wands. But I think this is Friday then. So you know what? Are we going into battle? I don't know. All I know is looks like we're going under the gate to something new, a new land. Grass is greener on the other side. We go on the trek. We meet whoever's at the border, and then we're on our way. That would make sense. But let's see what she says. I have not read this, by the way. So theme card, Ace of Pentacles. Temperance gives way to an ace. Temperance. All right. Suggesting a new start, or at least a clean one. I'm telling you, I don't know, Miss Clem. I feel like she handpicked this card. I'm just saying. Coins say we may finally break this range-bound cycle. Miss Cleo, what are you talking about, range-bound cycle? We're at all-time highs. If we went down, we would still be in the same range. Miss Cleo's losing it, man. I'm telling you. But we'll need to lean on the daily cards for directions. All right, fine. So Monday, that is today, 3 of Wands. I guess it was a night before. So 9 to 3 doesn't give us much. So we'll consider the 3 as a starting point or starting over point. Sure, fine. This one signals rapid expansion during a planning phase. Wands are impulsive, so that expansion brings big swings. Right now it kind of looks like expansion to the downside, but he said Mondays, man. Mean reversion with the chance of trend. Friday was choppy red, so Monday may bring a green doji. Nope. Well, unless we gapped up, which some things kind of did, but then end flat. Sure. Best case is a positive trend, which you can chase. TBD. I don't know. Tuesday. All right. So this is the card I never remember, but the Hierophant brings structure, balance, and clean liquidity. This means some empty zones may fill. See, the problem here is that the only empty zones that we have are below us, because everything above us is free and clear. When it trends, it's usually to the upside, so you can chase it. We'll have to look. I don't think we have upside gaps unless we're talking about the Qs. So maybe the Qs are a catch-up trade. Who knows? Wednesday is New Year's Eve. Bond market is closed early. Last trading day of the year. Liquidity low. Oh, okay, so she's taking a full-blown pass on Wednesday. That's what happened. Thursday is closed. So we go straight over to Friday, which is, what is this? The Knight of Wands. All right, so wands are back with the knight's energy. So anything goes as we, so she don't know nothing. I don't know. Card has anything goes. That's all I read. This card has a negative bias and rarely trends to the upside. Rarely trends to the upside. So we're expecting to sell rallies here. I'm okay with that. What's the date? We'll see. You can chase downside trends. Why, Miss Cleo? See, this is where you lose me. I mean, did she not say it's usually to the upside so you can chase it on Tuesday? And then Friday, she's like, we're expecting to sell rallies. So like, why would you, chase it for a day? Okay. I don't know. This card is, you can chase. Now she's like chase downside trends. She's a day trader is what she is. But I would not chase the upside. A trend is most likely after a trend day, and expect more action in the morning than after lunch. I don't know. Maybe. We'll see. Recap. So it should be a mellow week where we have a chance to make some money day trading, and long-term longs should still be in good shape. Yeah. I like that. Any kind of pullback, quite frankly, look, this Santa Claus rally has been so widely projected and expected. Like we're technically in day 2 of that. So I feel like this would be the dip that you buy if you were a Santa Claus rally believer, if you will. So without further ado, let's get into the real charts. And this is my typical view. I'm just going to reset this really quick. Move my coffee here. And make this so that you guys can see. Sorry, I didn't have this done earlier. But usually I start off on like a 30-minute time frame chart. So yeah, I don't know what Miss Cleo's talking about. Gaps. The only gaps are to the downside, 675 here. I don't see 675. We filled all these upside gaps. Filled. Here's filled. And we're just kind of teasing with that all-time high. So we're 1 shot, 2 shots, 3 to come, and 4 times the charm. Usually for me, I'm using a what's it called? A 30-minute time frame chart. Let me just do a quick measurement here from the most recent low. That takes me to about 681. What I'll do really quick is kind of measure out an average weekly range. So an average weekly range to the upside takes me to 703, and an average weekly range to the downside actually takes me to 670s, which is that quarterly retest. If I throw on some SMAs, simple moving averages, so 20-day, this is, so the 20-day simple is about 683. Let me do one potent one. There it is. So around the 20-day, I don't think this is I don't think we're gonna have a big pullback. At best, a pullback could be right around 682.20, which, by the way, this level, that's an NFP level, so non-farm payroll print from over here, which may or may not, that's your support. So breakout here, retest 682.20. Do we get there? The only way that we definitively get there is if we lose 685. And 685 was always a big pivot kind of level. It was this prior level right here. It also happens to be, I believe, last month's high. So that is literally the only way. And so for now, I wouldn't expect that to happen unless I'm trending below 685. For now, 685, actually 685.82 will be our near-term support. So in an uptrend, I think you kind of just expect this to bounce, but a pullback, a bounce, and possibly fail at 690, and then you could see that upside, something like that, which would be like a really nice little cup and handle. if you're a pattern trader, for the pattern people, but I'm not them. So TBD, we shall see. I'm just going to do Qs really quick and just do a quick check-in. So SPY's obviously at all-time highs. Q's obviously not at all-time highs. Still dealing with this prevailing downtrend on QQQ right here. Above some of your simple moving averages, but definitely not above overhead resistance, which, by the way, this resistance is not a non-farm payroll level, but when the government was shut down, the market has been operating off ADP, was operating off ADP levels, and that's exactly what this is. 615s, just under 615 is where I think this could go. Let me measure this. So that's about the 50-day. 615 is that NFP low. So this is from essentially this candle right there. Not able to get out of resistance. This entire red box is technically resistance. So the bottom of that end, which is where about where support shows up, technically support is going to show up right in this box. But I got like 1-2 levels just under 615. That's 614.40. And then I have a 50% retracement at 612.90. And then I have my 6.5 retracement at 609. So there is a gap at 609, a session gap. If we got there, that would be a legit decent spot to pick it up, maybe 606. But again, I don't see that happening right now. As long as we're holding like this prior week high, which is 618 here. Look, that literally just acted as resistance. Oh, sorry, that's 617.79. That's last week's low. I hate it when it does. Oh, I'm okay with overlapping. This is last week's low right here, 617. For now, that should act as support. But if we lose that, sure, then we're going sub 615 and below 615 down to like 605, down to about 605 at 10-point range. I would be slowly nibbling somewhere in here personally, if I see it, which for right now, I don't have a reason to see that that's coming unless we're below last week's low. If we are, cool, it's definitively coming. And I could patiently pick off 1 spot, 2 spot, 3 spots right in here. And that's it. Cool. I just want to take a look. So let me see. So the dollar is what's driving this debasement trade narrative. This is a 30-minute chart, but I think realistically, currencies don't move that much. So you'd really want to do like a longer term chart. Yeah, if the dollar bounces, which is really like right here, it's on support. I'll drop it down one more time. This is the near-term support level here. So to see the dollar at least stabilize right around here, I think that is to be expected, quite frankly. And we have some, let's say, inefficiencies in the market above, but even still, if you get this bounce, that could easily turn into this with all those major SMAs in the way right above it. That's a 20, 50, and 200 right above it. So yeah, I'm not, I don't know. This is still consolidation. I don't see a major breakdown happening. Not today. Let's check in on the rest. So gold, we had a heavy pullback. Biddy was at 90 too, right? So gold is here. I was short gold and then I covered it. I had like 390 puts. Shoulda, coulda, woulda held. But yeah, this is the GDP thing. Like if GDP is real, like if it's legit, I mean, this is probably just a simple, like buyable pullback. And we're in a support level here and now. So meaning like this is the last breakout. This is a 30-minute chart again on gold. This was that last consolidation. We're just retesting it and the 20-day simple right now. So I don't know. If it fails, it's 380, which what's that from high to low? It's not like a trend break, and then potentially 367 would be bigger buy. Well, would be not a buy, but a watch spot on gold. Yeah, that would be tough because that would be retest of that broken down trend. But I'm still not out of the weeds until I'm back over 385. So quite frankly, for now, that doesn't even have to happen. Like I could just see that also. So I think if you short it, maybe you have a little bit of downside, but not for long. It comes in fast, but I don't think it's going to be for long. Here's silver. So look at some of these. I mean, we're way far away from these SMAs. And I'm pretty sure even on this more recent pullback, we have extended well beyond. Yeah, I'm 100%. We're well beyond. $65 is that primary extension for the more recent one. And I'm just going to go on a monthly because you kind of need to for silver. This is that consolidation breakout, that 45-ish dollar range that everybody's talking about when there was all that shenanigans going on in the market. But also look, oddly how it's odd how all this stuff works. This is exactly the extension Target acquired just around $70 on SLV, not the actual commodity, from this consolidation through. So from here, what I can say is that 67 was a big deal. If we're back up over 67, it's very likely we're going to see that 85 and then some. But until then, yeah, there's a lot of gaps here. Let me just measure from that last breakout. What is a standard pullback? It's about the 20-day. So a standard pullback on silver takes me just under 60, and that is like exactly what I would expect. This is going to take a while usually to play out, but I would expect some kind of consolidation in that $60 range, just under 60. That's that pullback. It's a decent pullback. 20% pullback. So yeah, super possible, very typical, especially on a breakout of this caliber. But remember, 48 is that prior all-time high. Here's a weekly. If silver holds anywhere either in here, look, if it loses 56, then yeah, we're for sure going to 48, technically. But I can't see it going way deeper than 48. If silver's ever below 48, I'm just running to the pawn shop and selling it. That's what I'll tell you. But for now, this is mechanical. Margin requirement increase. I think it can easily give you that pullback into that like sub 60 level, just slightly below 60, which makes a whole lot of sense. Dude, all right. I probably shouldn't, but this comment is like, so if you has anybody seen this? I don't know. I don't want to spoil it, but there's a scene in the last episode of Stranger Things. And if you don't remember, Mike had been struggling with that. I think it's Mike. Is it Mike or is it Will? I always get those two mixed up. I think it was Mike. Mike had been struggling with his, I think, sexuality, like through the entire series. So yeah, he's a big moment in the final episode of Stranger Things. But I also feel like it was, and I'm not gonna say anything, but I feel like it was like part of that. This is the last episode, so we're gonna do something also, which is fine. It was a weird like, why did that scene have to be there for as a straight guy for as an initial reaction? But then when you think about it, look, that actually had been like built into the core of his character through the entire series. So yeah, I get it. I'm not turned off by it at all. No, I don't think it's cancel Netflix worthy. But anyways, if you've seen it, it wasn't bad. A little anticlimactic. No, that's not what happened. And yeah, it's super weird. All these Netflix is getting wild, which I think is like, yeah, they need Marvel. They need that extra piece because it's getting a little bit like a lot of the same, like monotonous, like a lot of the same. So I think Netflix this year is more of an investment year than a transition year. So I don't think I already sold my Netflix. I posted that a long time ago. It was like just under 120. But yeah, if I see it get absolutely decimated, it's a buy, right? Long term, for sure, it's a buy. But I don't know. I don't know that. I don't know that we're gonna get there right away. I didn't spoil it though. No spoilers. And whatever they're talking about, it's not what happens. Broadcom scaring me a little bit. So Broadcom hit my targets too. 635. We'll see. avgo. So let's go ahead and get into some requests. So Broadcom, I actually think is fine. So from a larger perspective, so I'm just gonna go to daily. Before we were through all this, and I'll just this kind of consolidation area. It's a small consolidation area here, but when we were in it, so this is your box, if you will. Here, we'll call this consolidation. Those lines I just drew right now, that's about the midpoint of the box. While we're in it, and we were looking to kind of extend through, an extension was going to be about $400, give or take, right into this box, right? And then earnings comes, and I'll play this forward at a reasonable speed. Earnings comes, and that's exactly where we went. $400 is like one of those psychological levels also. And where we are now, and then best case scenario, it would have held this level. That's 375, right? It didn't do that, as we know. We'll give you this number here. The bottom of the box is 325. But what happened is that it pulls back. Oh, see, that's what I get. Look at this. So it pulls back. It hits our targets upside. A little extension. Doesn't get over that 405. It pulls back, and it goes boom right into the bottom of consolidation. So this is like acting correctly from a technical perspective. So that's the lowest end. I was thinking somewhere around 435. What I'll say is moving forward, as long as it's over let's say 430, you can say 435. As long as it's over 435, it's building a new investor base, right? And or like here, this was support. It can go down to 335. But in this general box here, that's your support, right? So that's where we went, 325 here. And if this is the top of that box, if you will, really what you would want to see is this general area acting as new support. So this can pull back. Oops, this can pull back a little bit. I would expect high, like mid 40s, 340s to act as support if it does go any lower. But again, here's what you want to know. The bears are hiding out right here, right in here. See this, where they were buying down here. I need a red arrow. What's a down arrow? Down. But they were selling here, 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 here. This area is where the bears are. So if you're going to be a good bull, you want to know where the bears are. It's not through the bear zone. Expect a little pullback. But if it gets through 357, if you will, yeah, then the bears really start covering. You should instantly go to the top of that consolidation, which is, I actually think that's what's happening. You should instantly go to 375. At that point, yeah, then the bears are like full mobilization if they're going to mobilize, right? Somewhere up in here. And then you really expect another pullback into that 350-ish zone. And best case scenario, you get something like this later on. And then you're back on your merry way. After 1, 2, 3, 4th attempt, if it does get through that 375, yeah, it's very likely going there. So I'm not too worried about it here, but my expectations are pretty, what's the word? Muted for, let's say, Q1. This is a daily chart. So I don't think, I don't think that this is going to really get up and go without some kind of headline catalyst or pre-earnings type run up from here. But let's see. All right, so you guys, Nebius, a lot of Nebius requests. So Nebius is, here's the text emit alert. I didn't text him. Really? My text emit alert, realistically, let's do it. Let's do it. Because I'm not a shit friend. Like, I really wanted to do it well, but also I love Amit, but he doesn't know where the sell button is either. So because of that, I don't want to text him like willy-nilly. Like I don't want to text him and be like, oh, this is the low, and he does, and it's not, because there's a trading entry and he forgets to sell or whatever. But yeah, if you're like our friend and you don't know where the sell button is, you could wait a little bit. It's under 80. So I will probably, let me go ahead and update this. Really? I mean, I'm calling him at 58. That's like my major golden pocket level. But for now, I do really think that it's right around 80. All right, there's the alert created just underneath 80, which, does he need to know that? I don't know. I think it's going to be pretty obvious, but maybe it's not obvious for him because he's streaming. But it would look a little like this. You get a little liquidity grab. You're still in consolidation, and then you do get a bounce. I don't mind this here or any in this general area. Even today is fine. I have some Nebius leaps that I have orders working for right now. They're pretty spready. It's a leap spread. If Chris is still here, it's a Chris Patel staple trade. It's a leap debit spread. But I would do it that way because I do know you have to be aware that, like, at this point, this is not necessarily the low. It's a tradable bounce area. It's not like, oh, this is a great spot to buy. It's a tradable bounce area. Oh, this is a great spot to buy. Sub 60. Yeah, for sure. And that's again, only if you really believe in the I don't want to call it NeoCloud story. Yeah, NeoCloud story for 2026 and beyond. and specifically Nebius. I think that's what we'll have to see. So right now it's stunted. It's in a downtrend. It's a series of lower highs and a series of lower lows on a trend count. There's no arguing that. And it's still in its pullback phase, potentially into consolidation, but you still don't need to jump in necessarily. So even when it bottoms, I would taper expectations still that it's still in consolidation. You could see something like this for a while, which is why I'm like, it's not a super near-term thing. You could easily see this for a while before it actually breaks out, which would be extremely healthy and exactly what you do want to see. You guys are, I see one request for Iren. Hold it. Just, don't hold it, but like, hold off. These are bouncy, right? Like, I don't have anything screaming at me. Even if I was like super cautious, this right here would be your near-term downtrend. It's not over it. It looks fairly weak, but it's already down so much that I wouldn't really want to short it. This is more narrative specific than anything. 39.52 is this consolidation here. That's the very, very bottom of support. So for sure, if this gets below, if this closes below the pre-market lows of today, and if it and if the morning trade tomorrow doesn't immediately pick it back up, it's got like another 10% downside. Which, look, for Iren, that's literally only here. It's like 35. Yeah, the neo clouds as a group need to get a little bit more love. Let me see what it was on this. Pretty sure that big giant double top has played out. 33 was that golden kind of like pocket area or the top of it. So $30.95 is the bottom of it right here. I would like that better. I could see $35.95 right there. Much better support. Right now, you're just kind of tinkering. And yeah, I do think that you see this 33, which means that you'll probably see this. And then if it gets back over 33 and a half, because it's going to feel scary, I think you instantly go back to where we are. And here now, just this little blip on this chart. This is what makes people get so like goo over Iren. This little blip on the chart is 35%. The S&P doesn't give you 35% in a year. Like, no, that doesn't really happen. And then little blip on the chart is just wild. Okay. Micron. Yeah, Micron looks good. I posted this the other day. Look, I can't fight this. Oops. This is clear consolidation break. Here's your consolidation. Here's your pullback levels. You got the pullback right into earnings, 226. I caught this top and I did trade it short for a little bit to right about here, close. Then we had earnings coming, and the last time Micron did this move, like it just kept going. So what I'm going to do here is I'm going to do an extension measured move to the upside 305 on this consolidation break right here. So here's your low end of consolidation. At no point do you want to see this lose 260s. That's over and done with. But for now, that's a ways away. And what we're talking about is a breakout of this prior consolidation range right here, which, look at this. I can make this super clean. Here's support, break, retest, extension, retest again, 193, continues on, hits its head here, pulls back to a very bullish support, like bullish retracement. I mean, yeah, it's 300 plus, not a lot higher, but it is what it is. It was very similar. Like this was the last here was your breakout earnings. So earnings here, small pullback and whoosh to the upside, which is just insane. And when you look at this chart, I mean, they probably don't want me to do this. But from that consolidation break, which is multi-year, and what we're currently in, that's 320 up to 350. That's exactly what that was. And again, what's funny about this is that from here to here, like near perfect doubling, nearly. It probably is a perfect double because I'm not actually on the bottom here. Yeah, that is a double of this consolidation break. One more time. And then you go. So it should be 320 upwards of 350. This makes a lot of sense from a technical perspective. Is there enough upside for me to chase it here now? I don't know. It's risky because it's gone so much. I just feel like it's risky, but fundamentally, it's probably not horribly expensive. I saw a bunch of questions on Ondas. What is Ondas? Somebody was pinging Ondas earlier. There's somebody tagged me in Ondas. I think you need to be really patient here. So this is resistance. This is support. You're in the box. There's nothing to do on this chart except wait. And I think you need to have a lot of patience on this one. So your buys are as close to 7 as you can. And then maybe sell some calls around 10s. But this is 1, 2. I don't think the next attempt is it either. Then it might pull back to here. And maybe, if you're lucky, way down the road, I don't know what that timeline is. This is drones, right? Wireless radio systems, wide mission, critical, business to business solution. It's not drones. Is that right? What? I don't know this. Autonomous drone. Oh. But it's not government. I hate it when a company says, oh, this is my addressable market. Like, by the way, 275 million invested capital is like nothing. Homeland security, military. Okay, so they're kind of everywhere. It's a flyer. $3 billion market cap. I don't know. Have you guys ever heard of this? AV. This is 12 billion. I think this is probably a better look at this chart. So this chart probably a little better. And I was doing so I like the theme for 2026 just with Department of Defense stuff. But I haven't seen anyone look into this company or mention it before, but I believe they have some contracts coming like immediately. Oh, so some of you has government contracts. These guys do too. On who is they? Why wouldn't they? I mean, I don't know. So I think it's worth looking into. but I believe they have some contracts coming like right now. I don't know. Chart is like it's at a support-ish area. So like this prior support, and whatever was this push on this end, and I don't know what it was. It's right there. So you're getting whatever that was announced on the earnings, like basically for free here. And earnings, I mean, look, if it holds this level, it's a lot of if. I mean, anything in this space sector is going to be pretty like sketchy, risky. Even Rivian's super risky, but it's the risk to reward. Does it really work out for you? Technically speaking, yeah, this is a spot to watch right here. So, I mean, technically speaking, it's at support, holding support, solid bounce right off these lows. Technically speaking, it's where you want to look. Now it's got to get and hold over 260. I'd say 265, but a $12 billion market market cap. That's actually that's the sweet spot. That's like the sweet spot for a 12-month rally, if you will. And as long as you can identify key catalysts in the next 18 months, the market can, or maybe 24, the market can really start to price that in. Unlike like an optimist, we're like, okay, Tesla's great. I think it's less risk being Tesla because, but your upside, what, maybe like 30 to 50% in 12 months. Yeah. Oh yeah. I like this one too. But it's about the catalyst piece, right? So it's about the catalyst piece. Tesla 455 income. We can take a look at Tesla. So Tesla, I don't know. So just cool the jets here on Tesla shorts. This is exactly where Tesla pulls a Tesla and laughs a bit and says, "Gotcha." So here's that consolidation top. This is one where you would drill in just a little bit. You're retesting the top of this even more recent consolidation. So anyone that was like, "Ooh, I'm missing this expansion." Well, this is that breakout retest. Now, this is not like the buy spot. The buy spot was lower, 390s or whatever, when we're doing all that. Anyways, I had it. I need this on a daily. Was that lower end consolidation retest? Right in here. But this area is like wait and see area. It's a wait and see because you don't know that it's a retest and hold yet. What you'd want to see as a Tesla holder is like some kind of consolidation and then breakout one more time. What you don't want to see is like a big dip and rejection, because then it's not 450. It's again this 415 level that is still such a big deal. But 415, I mean, yeah, I don't think there's as Tesla's going to trade as Elon proxy, but that's the spot that has been the spot that remains to be the spot that you really want to see it holds is just under 415. And if you get this little liquidity grab type situation, worst case scenario, you're looking like this, like that. So it's still about 395. Looks like I do have a little, ooh, Hello. Found it. Hard gap. 393. When I see gaps like that on Tesla, usually they go a little bit beyond. It's not like a brick wall. A little bit beyond could be like 360s. Let me do this. So this is that consolidation that this is breaking up from. I think this is completed too. Yeah, so this is from this last consolidation here. Check this out. That was the breakout. It's just simply a measured move. Look, that's how we got to there. Now it has to get beyond 465. So call it 465 for your inflection point. If Tesla's over 465, then you're from here. That would mean that buyers stepped in and they pushed it higher. You're probably looking at some kind of trajectory into that. That's how I got to the 3 to 560. But to me, this was always like March kind of trajectory. So this whole thing, no big deal. And that's from this one. If they really start talking something like this, that's 650s, right? Which is where I was on those last purchases. Yeah. I mean, yeah. So it's just kind of like a pit stop in the existing trajectory. This is going to be, yeah, pretty basic. So like, again, look at this pullback into that 390. There was my confluence. This is fine. I mean, even if this comes down, right? Maybe it might push the timeline a little bit. 415's major trajectory. 465, you know that you're going to fives because that is a from here to here consolidation break. Yeah, you're good. You're good. And potentially this could come down like this one more time and you could have some serious consolidation. But that's how we got there. Just like that. Might even take all year. Who knows? But this chart for the next 12 months actually looks perfectly fine to me. More consolidation, the better. I'm not sold on this being like the breakout, but the next attempt, I will be sold. And yeah, I'm patient right now. PNC. Okay, so you guys are on the track of like, okay, for 2026 picks, if it's a midterm year, typically we have some pullbacks. I think you're on the right track. So you would probably want to be a little diversified. So PNC is a regional bank. This is something that would carry an IWM. And yeah, this actually looks good. This stuff is going to come into. So here's the thing about banks is that you want to look up something called Basel III. What AI do you guys use? You want ChatGPT, you want Gemini, or do you want Grok? ChatGPT, Gemini, or Grok? You pick, and we'll go to it. Dun, 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 dun. Llama? Stop it. Let's try Gemini. Someone said chat. We'll do both. I just wanted to, so in plain English, what is Basel? Is it Basel? BASEL? And financial stocks in 2026. Maybe it's that. ChatGPT. Give you one more. Grok. Who's got the best answer? Yeah, they're all premium. I just want to make sure I'm not on pro. Oh shit. Is this on? Damn it. This is on pro. You're thinking. Okay, Basel III. Rule book. After 2028. It's something about $100 billion cap. Dude, this is really forever kind of explanation. Oh my God. Thank you, Grok is the one that corrects me. Dude, I'm gonna, in one sentence. The battle of the AIs. Dude, why does this keep going to pro? Forces banks to hold larger cash reserves, which makes systems safer, but will likely drag down financial stock prices, large cap, by limiting the money available for profits and share buybacks. Which is why I think like we look at something like a SoFi, who's raising cash now. Safety rules generate forces big banks to hold more capital and liquidity, which means which in 2020 could slightly pressure banks' stock profits and buybacks, which means that the anything that's under it's $100 billion threshold. Those over it only applies for the stock with the banks that hold over 100 billion in assets, which is why like those regionals might have that bigger catalyst, right? International banking rules designed to make banks safer by requiring them to hold more higher. Yep. So if you're under that threshold, you're not going to be at risk of having these additional restrictions, and so it'll be easier for you to navigate a lot of forces, navigate the area. So I don't know where PNC is, but JP Morgan, that's why I might not, but like mine in this space is that FLG, which is like, dude, this is regional bank that has absolutely kept its assets on the balance sheet under 100 billion, which is exactly what you're seeing here. So like under 100 billion assets, but when that happens, that's going to be the catalyst for something like this. This is Silicon Valley Bank crisis. This is tied to New York real estate, though. Any regional bank is going to be tied to the region that they're in and that real estate market, to me, because the real estate market is like, you think about it, you're going to take a loan out to buy a house, which if we think that the housing sector is going to have a rebound, well, those areas are where the banks would be issuing loans for. So that would be something they would need. So this one, first little peak above this box just before the end of the year. And honestly, this pullback, this is a daily chart. It's not deep. It's pretty shallow. This is something that you would have to have an insane amount of patience on, though. Yeah, maybe late 2026 if you're really lucky, but holding 1240, I like it. Another flyer. Is that you guys? What? This is what you got because I have all the LLMs. I don't have Llama. Hilarious. Yeah, a lot of Gemini votes. I mean, I had the Pro on too, so it took a little bit longer. My bad. But Unity. So I'm in this annual pick mode. I think Unity has some catalyst too. This is massive. This is like, the problem is that if you have catalysts like that, it's very much going to come down to execution, right? And like the leadership team as well, on top of your typical, what would I say? Like on top of your typical macro headwinds or tailwinds, depending on what it is. This is kind of lives in a realm of its own, if you will. But here's that big old consolidation. Technically, this last high actually is a higher high from here, which means that you have at least this to get to. That's 57. I'm way back on this chart. Over 58, that's like a legitimate change in character. This is what we call something called, we call this a fair value gap. And then we'll have this is your IPO low. What is that? 66.24. Dude, why is it doing this? 66.24. So all those things, and then I have from this last consolidation breakout here, you're close. It's close to that 50-day SMA, so close into this box right here. Let's see what that looks like. Yep. So if in this area you get a pullback that holds, that would be a good spot to watch. And then if it drops down below 43 and then back up over 43, yeah, that's a continuation, if you will, which puts this as close to 40 as you could. And here's, yeah, I have that. Yep. And this gives me confirmation up to 60 for that same kind of area. Not bad, actually. It's a lot of execution stuff. They got earnings coming end of the month. Crowdstrike, I think you still wait. No, this is expensive. Look, Crowdstrike already had the run. It's pretty saturated. And to think it can hold up like a Palo Alto is a high bar. So here's that last consolidation area, same kind of thing. Here, look at that tag. And you've doubled. So for now, quite frankly, this is probably coming into 4. At which point you wait and see. But if you see 4, like, yeah, it's probably worth watching. I don't know that it's instantly going to bounce, but this general area under 435 to around $400 here would be a typical retracement. The most bullish retracement, I think it's probably on it now. Yeah. The absolute most bullish from just this move from here to here, that's what that is. Would be 458 at the 200-day simple, but that is like super weak support, not even a big deal. Not that big of a deal. That's going to set you right around this area. Like super basic trading bounce. I think broadly, it probably lives in this large channel. Yeah, I mean, you're like right on it. 460, you can watch for a tradable bounce in the near term. That's not, I mean, it's a tradable bounce. I can't say that it's a long-term bounce. It's just not enough price history there. Chewy, no, dude. I mean, I don't know what the time frame is, but if you're like, no, so I get it in terms of like online or in like brick and mortar stores are probably a dying breed. So like Target is probably going to go along with Circuit City and Best Buy and Good Guys and all that at some point in time. Not right now because we just had Christmas, but after this little run, yeah, it's probably time to exit stage left. But Chewy, even though PetSmart probably going to go also the way of the dodo, like I don't know that it's special enough to not just go to Amazon. But Salesforce is interesting, and then I'll call it here. Oh, okay, so it's back over a prior level. So this is your Salesforce. Yeah, I mean, what? So Benioff is old. That's true. He's coming out of the game soon. So this looks like it's going to try for 300 if it goes much higher. But here, this very moment, probably not. I mean, it's right there. It's like squeezy. Probably not. I'd actually expect this to do a little fake out initially. And it might even be like epically disappointing. I would not sell this. But if I saw 245 again, I think everybody buys it up. Just my thoughts. And eventually this gets to that 300 plus area. But if this were to ever get over 320 again, yeah, I think that could be a big deal. Right? Because this to me looks like you have this kind of trajectory, but that's again, yeah, if your time frame is multi-year, and you believe in the Salesforce team, look, this is Palo Alto, you will, like, it's completely saturated, no question, but it's growth by acquisition. That's best case scenario, but for now you have this, which is 275 right there. So this is your pivot right now. Yep. So 275. I see it here. You see a big breakdown. Support that broke down here. It's pretty clear. Big consolidation. So it's not exactly out of the weeds yet to me, but it can see 275 easily. Very short order if it squeezes, like that would be a squeeze. And then you'd expect this kind of like a Tesla type move. And best case scenario, you're seeing this, right? Which is how you would get that. Otherwise, you got to be really cautious because if it loses that 260 or the area it's really fighting with right now, that's how you would see 245. But yeah, I mean, if you're patient, I don't know what the catalysts are right now, but if you're patient, and you don't have like expectations that this is going to explode right away, it's a slower mover. But yeah, any like invert, I mean, even still, like this goes, then you're at that point you're cautious there. Net, I mean, it's long term, it looks like a decent pullback, but that scenario has got to take a long time to pull out or to play out. Even this. So tradable, but at kind of an inflection point right now. So it looks like it's catching a little selling. You might give up. Maybe it's one of those 1 year or annual rotation trades. Ooh. As I'm speaking, they're buying it. Look at that. Good guys. Yeah, good guys is like the 1990s, right? Or 1900s. At least you knew what it was. 240 you love? Yeah, it looks good. Coin. We'll see. Yeah, I'm not a Coin has some catalyst this year, but look. I don't think you have to rush into this. I think you're here. It's probably right in this little channel that I just created. That's like as close. That's nearly 200. So another 10%. I mean, I don't know. It's fine. They have. I know what they're doing in terms of like their product. Look, their product announcement for client assets. There's a crypto called HBAR that I think was doing that for a long time. They like tokenize real world assets. I just thought I was like, that's so lame. But what happened to my sidebar here? Oh, I must have done market cap. Let's just do Biddy. So Biddy's at the level Bitcoin. This is our just more recent from this low to that low. There's no reason to measure this one to here because we had failed that at 92. The only thing I'll say is like over 93, not 90. Sorry, over 94. Then we're probably quickly going to see 100. But again, you're going to hit that $100 ceiling and it's going to be resistance. I just don't. I don't have a trade here yet or a setup to think about taking a trade. I guess the bigger concern on Bitcoin would be the broad trend losing if it does continue any lower. But I don't know. So to me, this says, look, I'll at least get this, and then I'll have a moment to think about this for a minute. Because like if I get this, and then I get a big, then do I trash it, or do I go not trash it, but like do I go through all the work to open up wallets and then sell something. Maybe, I mean, but that's 70K. It's not even that big of a deal. But I do think a trajectory like this for Bitcoin is probably in the cards. No, I'm just not. I'm not selling anything here. That could easily fail in you, and then you see that again. Last time I sold Bitcoin, it was at $15,000, and I sold a lot of it. How horrible of a decision is that? Can you imagine selling like a lot of Bitcoin at $15,000? Yeah. Is it like one of the worst decisions that go down in the history of me? Also, like second worst is buying a car with Bitcoin pegged at $8,500. True story. Bitcoin pegged at $8,500. I mean, that's like you're talking about this era. Here. What an idiot. Actually, I think it was here that I sold a bunch of Bitcoin and I bought a car with it. 2019? Yeah, it's probably 2019. Then it popped up for a little bit and I felt real good about it, let me tell you. And then like, that's the same year. And then, yeah. All of a sudden you're like, what? I'm literally still driving and this car, and it turns into like a $500,000 hoopty at that point. You're like, oh, what a loser. Yeah. So no, I don't think I'm gonna sell anymore, honestly, for that reason. I don't think you could blame me either, because that's a huge drawdown. Yeah, I felt good about it for a while. What are my targets for AVAX? 250. Also don't have any intention on selling. The alt in the alt world. So first of all, AVAX is an interesting. This is a spot that you would accumulate for sure. I saw it at $11. I nibbled a little bit. Yeah, I think that you just like dip into this guy at the lows if you're going to take a lotto shot, right? This is the fastest blockchain measured by time to finality. If it is not happening, but I mean, if I could dream, yeah, it's 250, 235 in a decade, or it goes to zero. It's extreme high risk. But yeah, this thing goes to 35 to 10 is what I think it just recently went to. Holding this $15 low, $16. If it gets over this, then here, then it's gonna look a lot better. 16. So here now it's like, maybe it's poop, maybe not, but that 16 area here is a major inflection point. So if it does get over 16, which is still, by the way, like 30% higher than where it is right now, it's going to 30 plus, just saying, and you'll get a quick double on your hand. So in here, I would definitely watch like this space, the alts, if you will. I don't know that the alts will start to show some signs of life, which is a small bounce, not a big bounce. I saw ADA, Cardano. Yeah, it's like way back, all the way back. There's one, this Ripple, dude. I feel like if you own a Ripple, I've never been a fan of Ripple, XRP. I like Ripple, the company, but XRP, I mean, there's so many people that are like super bullish this. I think that this token is going to get absolutely decimated. I'm pretty positive. Like, I'm looking for a short ETF to put dollars into this short, for real short, because guess who's probably going public next year? Ripple Labs. And then guess who's probably going to, the first thing they're probably going to say is like, yeah, we don't have any affiliation with XRP, the token. And it's going to be the walls are just going to crumble so fast. I'll tell you that's what they're going to say because I worked with them in IT. And that's what they did say. And they do say. But anyways, that's my rant. Other than that, look, I'm not selling in Bitcoin. I don't care what it does, right? It was the 2 times I really sold it, one for the car, one to go on, second time was about $15,000. And I just emptied every Bitcoin ATM there was in Vegas, every single one, off the strip, on the strip, downtown Fremont Street, every one of them, I let them completely dry. I also cry when I think about that. It was fun. But yeah, I'm done selling this. Otherwise, yeah, I think there's a lot of stuff. Rivian, I like a lot. I think this dip is potentially viable. Still love my hoodie. Hoodie's going up there. Hoodie's still currently largest position. Just trying to like, do I shift stuff around? Because I'm liking the Rivian Catalyst more and more. But I will say, you know, the Rivian's going to have a big, it was Tesla. When Tesla launched the Model 3, it was like kind of choppy initially. And then they run into these manufacturing problems. So that's the real risk. It's execution. So Rivian may not be 2026. It might, and it really might not be 2027. It could be more like 2028, 9. If you look at a Tesla kind of timeline. But yeah, I think the anticipation from now into R2 and Autonomy Plus, their subscription service, that can push this from here to 60 plus, I think. And then when we start talking about 120, 160, 250 targets, that's got to be 2030 timeframe. But anyways, that's it for me, boys and girls. I love you all. I'm going to take a quick break and get ready for our closing hour, power hour, if you will. I mean, Santa's still in town. Don't think he's not. So I like it. I like it. See you guys on the next one. Adios.